You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Welcome to the Options Playbook, the program where we break down cutting-edge option strategies and explain how you can incorporate them into your own portfolio. Whether you're looking to grow your capital with some offensive maneuvers or protect your investments with defensive plays, you can find them all in the Options Playbook. The Options Playbook is brought to you by Ally Invest. Anything mentioned today is for educational purposes and is not a recommendation or advice. Options involve risk. Please refer to ally.com/invest/disclosures to review additional risks involved with trading options. Securities offered through Ally Invest Securities LLC, member FINRA and SIPC. Now, let's open the playbook and get started.
Welcome to Options Playbook Radio. I'm your host, Brian Overby, Ally Invest Senior Options Analyst and author of The Options Playbook. All right, last week we did the 400th episode of Options Playbook Radio, and we did an hour-long huddle-up. Myself and Mark Longo got together and answered all your listener questions. I want to give a great shout-out to Options Insider Radio for producing all of these events, to Mark Longo for being an awesome compadre whenever we do our huddle ups together, and to all the listeners out there that have made this show a success. So with that said, we really don't have a trade to review from last week because we did a huddle up and we talked about a lot of different trades. And today's theme is actually drawn from a question that we had last week about a long straddle. I'm going to go a little bit crazy today. Maybe I'm kind of losing it, but we're going to look at a long straddle in the SPY. The question in particular was about a straddle that we recently did in Micron Technology, symbol MU. It worked out just fine, but it was all based off of a chart. Also, there was an article in Barron's that talked about long straddles around earnings and how the long straddle was a trade to do around earnings this earnings season. Markets moved a lot more than anticipated. And with that said, I don't like to do long straddles around earnings. I don't like to do long straddles around known news events. And what I'm always looking for is, in the case of Micron Technology, we were on a precipice. We were looking at a new high in Micron Technology, a high that we hadn't seen since 2006. So it was a very interesting area of the chart, and that was a big reason why we were looking to do it in Micron Technology. Not to mention the fact that the stock just overall had been more volatile than what the implied volatility, the actual volatility was fairly high. So other examples, we talked about a long straddle in Boeing, where this was well before the pandemic, and it was all about the fact that they had their trials and tribulations and unfortunate plane crashes. And so there's a lot of news. How long were the planes going to be grounded? Seemed like every day there was new stuff coming out about Boeing, about their process, about the management, about the workers. You had different countries that were saying the plane might never fly again, and there are other countries that were ordering more planes. So it was just very news heavy, and the long straddle worked out in both of those cases. So now today, and this is definitely not meant to be a recommendation, I have been looking at just in general, I've been feeling like the VIX is a little bit lower than what you might think the VIX should be. I think that there should be more angst in the marketplace than there actually is. We're just shy of the 30 level in the VIX, and there's some major news events that are going on. So as I let you figure out the major news events, unless you've been living under a rock, you've probably heard of a little country called Russia doing a little bit of invading. We got the 10-year up around the 2% as far as the interest levels are concerned. That actually came back a little bit. We were the TNX is the index. It tracks the yield in the 10-year, and we were actually up above that 2% level, and that was a line in the sand, if you will, as far as interest rates are concerned. And now we backed off on that interest rate. So that's probably the only real good news of the marketplace recently. And so I anticipate more volatility than what the marketplace is implying. And I think that there will be a major news event that will start driving that volatility. Now, I'm not 100% sure. Obviously, that news event could make the market go in one direction. I'm a little bit more worried about chop if we're doing it in the S&P 500 index. And most of the time, when you're looking at indexes, you're thinking, I'm going to sell premium. I'm going to sell an iron condor. But in this instance, I just kind of want to have some fun. That conversation came up about long straddles in the 400th huddle, well, I should say episode, which we did a huddle up in. And so right now, if I look at the S&P 500 index, I should let you know that we are taping. The market is live. It is a Wednesday, February 23rd. We have the VIX index trading at 29.59. We have the SPX down about 0.5%, 24.02 approximately, but the markets are rocking and rolling as we speak. And the 10-year yield is 1.97% right now, so just below that 2% level. So with that said, if I run over and I am going to take a snapshot of the spiders, because I don't want this trade to move at all. I see from my snapshot that the SPY is trading at 427.30. It's down $2.27. So this is going to be a short and sweet call today. We don't really have a trade to review. As always on Options Playbook Radio, this is not meant to be a recommendation, and we really are just kind of having some fun on this trade. We're going to go out to March 4th so that by next week, the trade will still be alive. We are paying up for this. Even though I think the VIX could go higher, in this instance, we're still have a 30% implied volatility in the VIX. Means we're going to be paying up for these option contracts. So I'm seeing the most at the money put, the 428 put, and the most at the money call, the 428 call. If we bought that trade, it's trading at $15.27. That means we're going to pay $1,527 for this long straddle. We're going to look to leg out of this trade much more than we would if we were on an underlying index, or on a specific underlying stock. And here's the reason why. The SPY might be more prone to more of a chop. I think that there's going to be more volatility than the marketplace is anticipating, but I'm a little bit worried that volatility could be that we're going to be up 2% tomorrow and down 2% the next day. And it just ends up being chop, and we really go nowhere in the marketplace. That is my biggest concern. If 15 points is about a 3.5% move, so we need that in at least one direction, right? We want it to either be on the call side or the put side. So right now we have the call trading for $7.28. We have the put trading for $8. We're going to look to, if the put or the call starts trading around $16, we're going to think to just get out of the trade. In other words, we're going to play with the house's money in that instance, and we're going to look for the swing. We're going to look for the swing trade and try to make some money on the other side of the trade too. So that would be my goal. I would have a limit order in either on the put side or on the call side. Actually, you could do it on both to try to sell good till canceled at 16 or more. And you can always adjust it. So you can put it in at 17 and say, well, if I see it around 16, I'm going to think about getting out of the trade. You're obviously in this trade, you're going to be watching it overall, even though we are talking about it on paper. But this is this will probably be the only time that I will talk about an actual long straddle in the SPY. And I'm doing it in the SPY because the SPX would just be too costly and there'd be too much risk. This is truly a speculative trade, but it goes along with the questions that we received last week, and I just think it will be fun to look at. I actually do think that the VIX index at some point in time between the March 4th expiration will be trading north of 30. I think I could see the 40 handle being within range. We haven't hit 40 that often in the VIX index since the pandemic, and I do think that that is possible with a major news event that could happen over the next 10 days or so. So that's going to be it for this episode of Options Playbook Radio. If you have any feedback on my long straddle, I'm not quite sure if doesn't have to be good. It could be good or bad, but I'd like to know your feedback and your thoughts on it. You can email them to me at theoptionsguy@invest.ally.com. Follow me on Twitter if you'd like to learn about all the educational events that we do at Ally Invest. My handle is very simple. It's at my name, at Brian Overby. Thanks for listening. We'll be back at the same time, same place next week. Until then, may all the options you bought finish in the money and all the ones you sold finish out.
The Options Playbook is brought to you by Ally Invest. Anything mentioned today is for educational purposes and is not a recommendation or advice. Options involve risk. Please refer to ally.com/invest/disclosures to review additional risks involved with trading options. Securities offered through Ally Invest Securities, LLC, member FINRA and SIPC. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.